Okay, hello everyone. Welcome to the HodlCast. Today we have very special guest Bruce Fenton. Bruce, thank you so much for taking the time out today to speak with us. I think most people listening to this probably know who you are, but if you don't mind, can you give us a little bit about your background, how you got involved in the Bitcoin space, and what you've been doing in the space ever since, which is quite a bit.
Sure. Thanks for having me. So my background, I came from traditional finance. I was a stockbroker for 18 years. I'm not licensed as a stockbroker now, but I'm a registered investment advisor. So I've done some kind of registered investment advisor type of business in the US for my whole life, really, since I was a teenager when I was first registered. And before that, I had odd jobs in brokerage firms. You know, my mom worked there when I was a little kid. So I got my first job at a brokerage firm when I was 14. And so I was always interested in emerging markets, emerging technologies, small cap stocks, that kind of thing. And Bitcoin was sort of a combination of all of the things that I was interested in: tech, freedom, free markets. I became very interested in the cypherpunk ideals and the things that I think are important to the foundation of Bitcoin. So I got into the space full time around 6 or 7 years ago. And ever since then, I've been acting as an investor, and I work as an advisor to a couple of companies, mainly as an investor. And I've been particularly interested in anything that combines the old world that I worked in of traditional finance with this new world of Bitcoin and blockchain technology.
Excellent. And Bruce, what's something people might not know about you, a kind of a special fact?
That's a good one. Let's see. Well, I was in the Navy for a couple of years. I don't know if people know that. I was in this. I didn't become a Navy SEAL, but I was in the SEAL training program. I went through some of the hardest parts, including Hell Week. You have to be assigned to a SEAL team afterwards, and you have to go to jump school to be a SEAL. So I didn't do that. But I did go through the hardest part, which is Hell Week. So that was kind of interesting. I guess that's a tidbit, interesting fact.
Yeah.
Kind of an interesting experience for sure.
Mm-hmm. At that Hell Week, I was in school with a guy who talked about going through it and having to do the plank for hours on end, and some of the training in there just sounds incredible. But
yeah, it's crazy. You go a whole week without sleep, and the biggest thing that breaks people's spirit is the cold. It's cold like you've never had experienced before. It's just this mind-numbing cold. They put you in the ocean and they freeze you to your human limit, and then they have you get out. They have a doctor. They'll have you do jumping jacks, and then they'll have you get right back in for days and days and days. They do this, and you don't get any sleep for the whole week either. You get maybe a couple hours sleep, which they don't do to be nice. They just do that because 2 hours of sleep is worse than no sleep, because waking up from that is just such torture. So it was an interesting experience for sure.
Well, it's probably something you can look back on whenever something seems hard. You're like, okay, it's not as hard as that was, and I got through that. So
yeah, it does help.
Mm-hmm. And your son, how's he doing lately, AC? I know I got this mug from him. I met him in the what was it called, Coins in the Kingdom conference, and he was such a cute little entrepreneur. I was so impressed with him. He had the mugs for sale. I think they were $10 worth of Bitcoin, and he was so fast on the iPad checking people out and stuff. I really enjoyed meeting him, and then was very sad to hear he's been struggling with his health a little bit.
Yeah, he's doing okay. He saved most of those Bitcoins from back then. That you were one of the first purchasers. That was a long time ago, maybe 2014 or something. And yeah, he had a couple surgeries. He had a brain surgery last year, and then another brain surgery, neurosurgery this year, which included a spinal fusion. So very serious surgery, and he's in a long, slow recovery process. He's doing well. His spirits are good. He's very strong. I can't believe he's able to, deal with it so well. It's hard. I mean, imagine if he had a halo on, and his mobility's limited. It's challenging as a young preteen to be limited on what you can do. But he's had a great attitude toward it, and modern medical science is pretty amazing. So that's good.
Yeah, and probably helps having the support system. You guys have a nice, a good family that.
Yeah, my wife is the unsung hero. She does a lot of work. She hasn't left his side for a couple months now. It's been August, September, October, November. So it's like 3-4 months she hasn't really left his side. You know, she slept next to him, and you know, he has a lot of trouble sleeping because he has a collar on now. He had this halo on for 6 weeks, which is like a metal device, you know, kind of enclosing your head, and you know, makes it difficult to sleep. So she's always keeping an eye on him and bring him to his doctors and things like that. So she's definitely an unsung hero. She does a lot of work. She's chief operating officer of the company. She used to be a hedge fund manager, and she does a lot of work with the company as an active board member and as a member of the company. And then she does all of this in addition. Plus she's got to be married to me, which isn't that easy either, right?
Oh, well, you know, hoping for continued, you know, path to recovery for him for sure. Yeah. Thanks. And then you've been busy recently too. You launched Watchdog Capital, that's an SEC registered broker dealer. So can you give us you know, what was that process like?
Yeah, it's very exciting. I was more familiar with the process because I was a Finra member for 18 years, and I'm still governed by Finra in some ways because I'm a registered investment advisor. So I'm very familiar with the regulations. I think I first learned about what the SEC was when I was 7 years old. My mom, you know, she was a stockbroker. She came home and told me that this broker had gotten arrested and hauled off, and you know, sent to jail. Basically, the cops came in. You know, the local police, the FBI, and the SEC. Usually, when the SEC makes arrests, I think they have the FBI do it in conjunction with local law enforcement. So, as a 7-year-old or whatever, I thought that was just fascinating. I thought, you know, my mom was some kind of, you know, secret agent or something. I thought that was really cool. And so even at a young age, I knew you don't mess with the SEC. And and then I followed those regulations for a long time. So about 3.5 years ago, when the Dow came out, I had two simultaneous reactions. One was, this is amazing, it's seamless, it's easy to raise money. And two, this is definitely not a registered security, and it's going to have problems with the SEC. And I think I was right on both of those counts. But the amazing part is more impressive than the, you know, unregulated part. So what's exciting to me about these securities tokens is, you know, that they can do things that you couldn't do before. Complying with the regulations is possible. You know, a lot of people made a mistake in this industry of sort of trying to avoid securities regulations by pretending they're a utility or pretending they're something else. And, you know, coming from my background, I knew that that wasn't going to fly. These are very strict rules. And for decades, long before cryptocurrency, everybody in the world has tried to invent a way around securities rules. You know, it's nothing new. It's literally gone on for generations. You know, every 10 years, there's somebody who creates some new thing, you know, oh, maybe this copper key is not a security and we'll sell it for membership, or maybe this is really a lottery, or what. No, it's not going to work. But the flip side, it's strange because the rules aren't that hard to comply with. You know, I make the example a lot of times, it's sort of like if somebody is anti-drug and they want to just say, well, I'll show the system, I'll set up a dispensary with no license. Like, no, you won't. It won't work. It just won't work at all. You're not going to bend the rules or something like that. You know, they're very strict, and they need to be complied with if you want to have any chance of operating in the US. So I set out a path a long time ago. I said, well, we'll just get fully registered, be fully SEC registered, do everything completely in compliance. And then all the exciting things still remain. There's quite a bit you can do under the current regulations, I think, that a lot of people don't realize. So that's what the point of Watchdog is, and that's what I'm really excited about, what the company's going to be able to do.
Excellent. And for people that might not know, so what is a broker-dealer, and what's their function in the capital markets?
So in the United States, you need to be licensed as a broker-dealer if you want to sell securities or get a commission on securities. And securities, as you know, is a very broad definition. Mainly we're talking about stocks, but it can be any kind of, all kinds of other instruments, bonds, debentures, evidence of debt, investment contract, which is its own very broad thing that's defined by Howey and a whole bunch of other things. But basically any kind of agreement that's tradable is a simple way to look at it. That's the simplest definition I can think of as a security, is a tradable agreement. A stock is the most common example. So anyway, if you want to do anything, so basically a whole bunch of stuff is a security. And if you want to do anything with a security that relates to commissions or contingency fees, or you want to act as a dealer or a broker of these things, you need to be licensed in the United States as a broker dealer. And the company that does that or the group that does that is a group called Finra, which is a self-regulatory body, but it works very closely with the SEC. You know, they might as well be government in terms of their level of power over the industry. If they tell you to do something, you have to do it, basically. I take anything from Finra the same way I would take it as if the SEC told you. You don't really have an option to say no. So it's a very powerful self-regulatory body, and it governs all of the major investment firms. You know, Charles Schwab, Raymond James, Merrill Lynch, Morgan Stanley, Fidelity. They're all Finra members, and all of the people licensed to have significant management or compliance functions, or definitely anybody who's dealing with customers doing sells and buys and that kind of thing, you have to be licensed. So it's pretty comprehensive. There's a lot of different kinds of licenses and ways to do things within the regulatory apparatus, but the main thing is that you're a member of this self-regulatory body and you're able to do things that you couldn't do if you're not registered. And by the way, I think that it's a big mistake for a lot of companies to not be registered because, you know, as I said, these rules are strict. They've been around a long time. You're just not going to be able to sell securities without a license. So most exchanges are not licensed right now. And the reason they're so scared of anything being classified as a security is because if something's classified as a security, you can't sell it. You have to immediately delist it. So they don't want to be in that position of having to delist things because that's or worse, get in trouble for having already done transactions in it. You know, that's even worse. You know, it could be a 1-2 punch. If the SEC tomorrow said, we think XYZ is a security, you've been trading it, you're an unlicensed broker dealer, which is actually, you know, these things are a little bit subjective, but in my opinion, they're going to, you know, it's one thing to do an unregistered, unlicensed offering. I think that's bad enough. That's clearly against the regulations. But if you act as a broker, I think that they view that as kind of almost one step worse. You know, it's sort of, to go back to the dispensary example, it's kind of like, you know, having illegal marijuana that you said you were a patient and you really weren't, or setting up a store to sell illegal marijuana that you're telling everybody's a patient and they're not. You know, that's the kind of thing. It's just, you know, if you go into New York City and you set up an unlicensed dispensary, you're just immediately, it's not going to work. You're probably going to go to jail. And that's the way it is with brokerage. If you are an unlicensed broker dealer, I don't know about going to jail, but your business is it's just not going to work in the United States. And all the cleverness and all the trickiness around it isn't going to get you out of it. It's hard enough to comply with the laws if you're trying to comply.
Yeah. Although I've been surprised at the lack of enforcement action against the exchanges, because I think I agree with you that what is being sold on the exchanges right now on some of the crypto exchanges would definitely be classified as securities. We've seen, you know, a lot of explanation from the SEC on what is securities, and we saw one enforcement action against Ether Delta like a year and a half ago. I forget the exact date, but it's quite some time ago now, or maybe just a year ago. But we haven't seen anything since. And I think there's been, you know, certainly continued sales of what would probably be securities on some unlicensed, you know, not securities licensed exchanges. So I think some of them might have got that ATS license, which gives a little bit of breathing room. It's not quite as in depth as the broker dealer registration.
Well, no, the ATSs are a type of broker dealer. And that can work, but only if those securities are listed. So if you're, so Watchdog as a broker dealer, for example, can trade in securities, but you have to make sure that they're either listed or they're securities that were offered in compliance with the rules. So they can be exempt. They can be Reg D or Reg A, but they have to have followed the rules to do it, or you could have another problem with it. But at least the broker dealer probably, you know, depending on the circumstances, wouldn't be in as much trouble as long as they've complied on the security side, that those securities are really, you know, proper securities and they're following their rules.
Mm-hmm. So is that what Watchdog will mostly act as, sort of a back office or a transfer agent for companies that did the Regulation D kind of token raise or the Regulation A+?
Yeah, the big picture for Watchdog is, so one thing Watchdog is going to do is license other people and companies. So Watchdog can license registered people. So if you have a startup or something, you could take your exam. I mean, and this is it's not a mass market business. It's a very kind of, you know, one-off sort of thing, but you could take an exam and become licensed, and then you're able to do those transactions, and your your business would be able to do those transactions. So that's kind of Watchdog's model. And then the overall business is really focusing on anything that's a digital security, stocks, mostly stocks. I like stocks a lot. I think a lot of these hybrid things where it's a security, but it doesn't have the benefit of a stock aren't that great.
Yeah.
There's a lot of things that just the terms aren't that great, but stocks I think will be it's a really simple way to do things in the future. If you want to raise money for just good old fashioned equity is a good thing to do. So the company is going to work very hard. And what we're working on now is to make as many joint ventures and alliances as we can with different protocols and clearing firms as well as custodians, just to make a really good network so that anybody registered with us will have a lot of different tools that they can work with all kinds of digital assets. So really anybody issues a digital asset, whether it's on Bitcoin or Ethereum or some other chain, they'll be able to work with our firm and we'll be able to do transactions within that asset and help people be registered to do transactions within those kind of assets.
Excellent. And I saw a headline, I didn't read the full article, that Fidelity recently got some kind of SEC approval for custodian or for custody of assets. So that's, I think that was the first time that someone's been approved to hold these kind of assets, the digital assets too. So that's pretty exciting.
Yeah, there's a couple of firms that are qualified custodians under New York law. Fidelity already had approvals. I think they amended some of their, they have a million different things they can do, but I think they amended some of their stuff to make it, really clear. But anyway, the end result is that they're able to hold these assets for certain institutions now. So they can do, I think they're custodying Bitcoin now. So our belief is that this is going to become a lot more common, and this is, definitely technology that can do things that other things you couldn't do before. So I think that what tokenization will do, it makes it so that people can trade in a much easier way than you could before. So you can, move something of value across borders, and you don't need a trusted third party to say what's true. Mm-hmm. So that's kind of the big deal about it.
And what about insurance? Is there any way to insure I know in the stock accounts, everything is insured, but is there a way yet is there any insurance companies willing to insure the digital assets?
That's a great question. I think so. I think some of the custodians, I would imagine that Fidelity's, I haven't looked at, I assume that it must be insured. And I think some of the other ones are. Usually the way that it works is that a custodian takes some responsibility and then the insurance insures the custodian. So it would be between those two parties. But that would be, that would make a lot of sense. And I know there's some that have worked on that. So then the insurance company's got to come in and say, okay, what are your procedures? How do you, if it gets stolen or hacked or whatever, the insurance company makes that right to the holder, which is good. And by the way, this is an interesting thing, I think, as a quick aside. A lot of people from crypto are very, they sort of view this as a goal of getting rid of custodians. And I don't think that's really going to fly. I think that you have custodians for a reason. It's a real pain to be custodian of your own money, and it also subjects you to a lot of risk. And if you're an investment advisor or you have a lot of money, then it subjects you to insane risks. And a lot of money is held through investment advisors. So those advisors just aren't going to custody the money. There's just no way that people in every town in America, there's small registered investment advisors and solo practices and these kind of things that help people manage their money. They're just not going to custody it. There's no way you're going to have somebody with some 3 employees who's going to take on $100 million in risk because they need a whole extra employee or something just to cover that risk. It's just crazy. So, and also from a people standpoint, it's one thing if you're a real techie and you log in every day and you're messing with your keys, but most people don't do that. Most people want to be able to leave their money. You have, family crisis, different things like that make people not want to need to be right on top of their money at every minute. I mean, just with me, like with our son, we knew we were going to be at the hospital for a couple weeks during his surgeries. So I had to, mess with everything, make sure everything was good in a position so I don't have to worry about it for a couple weeks. And that's kind of not that great. The old way, despite its drawbacks of these central parties, it works for a lot of things. So I view it as a way to make third parties optional. And I view it as a way to replace central banks, but not necessarily. You could have another kind of bank that's like a voluntary bank. And personally, I'm going to use custodians. Some of my Cypherpunk friends are going to laugh at me for that, but that's just my comfort level. I don't want to have the risk of having people try and rob me. And I especially as an investment advisor, I've never custodied crypto for anybody, but if I did, there's no way I'm not going to be walking around the parking lot to my garage at work with a treasure around my neck, with $20 million on it or something. There's just no way I would take that. I'd rather retire than take that risk. There's just no way I would. So I think custodies are really important. So I think this Fidelity deal is a big deal. It's very important. And I know some people will disagree with me on that, but I think custodians are great if they're voluntary.
Mm-hmm. I agree completely with that. And then so we've seen just from the way that most people seem to want to hold their Bitcoin or alternative coins is often on exchanges. And then the way this unregulated system has evolved, so much money has got hacked through it. So if we can have a safe kind of custody that people can really trust, like when you buy stocks, it's never really crossed my mind that one of my stockbroker accounts would steal the money or lose the private keys, or that anything would happen to it, that it wouldn't be there for me when I need it. So the stocks might go up and down with the economy, but the actual back office functioning of it, while it's maybe slower than crypto in terms of moving assets around, I have a lot more trust in it and I think most people would.
We don't want to bring those days back. The thing is, there's a whole bunch of people that have even $200,000 or more. Say if you have 200,000 or more in crypto, your life is at risk. There are people who kill you for $200,000. And you go to a crypto conference, you go to Consensus, there's 4,000 people there, probably 3,000 of them have that. Everybody's got some, and a bunch of them who have 10 million, and there's a handful who have 100 million. And, or maybe now this morning it's 60. but the point is it's a lot. And that's a huge, huge risk that people aren't going to take. It's very scary. Like you said, compared to the traditional markets. I used to work for a major private equity firm, and the top 50 employees are all like $100 million plus people. And there's several people who are billionaires, maybe 10 people who are billionaires. They don't worry at all about somebody going in there with a gun and robbing them. What are you going to do? Like all these big PE firms, KKR, Blackstone, Apollo, everybody knows that they have billions and billions of dollars, but how often are they robbed? What are you going to get if you walk into one of these firms with a gun? You're going to get kicked out by security. You might get a watch. Maybe you get a laptop or a watch from somebody, but you can't say, hey, give me your, sign over your Carlyle limited partnership, 12 shares to, it just doesn't work that way. Mm-hmm. And you look at the Forbes list of the very wealthiest people, they just don't have to worry. Zuckerberg has all kinds of other issues, but one of the ones that he doesn't have is somebody coming and trying to steal his Facebook stock. He's more at risk of extortion or kidnapping or anything else. So, the risk of this theft, whereas for crypto, it's a whole different thing. You could be a tiny little crypto company with $10 million in crypto, and you've got to have basically Fort Knox level security. You see crypto people with bodyguards and things like that. It's not a great system. If you could drive through a wealthy neighborhood and look around, suppose we get crypto where Bitcoin is truly a global reserve currency. If somebody could drive through a wealthy neighborhood saying like, oh, okay, I know that all of these people have at least 100,000 in crypto, that would expose them to a great deal of risk. So I think that it'll end up being just like, using accounts like Fidelity or something like that. But that doesn't mean that you're washing away the value of crypto. I've never thought of the value of crypto being replacing custodians. I see it as replacing central banks and involuntary third parties where you just have no choice but to use them. Where this way you can at least control your own money and put it in different places where you want. And if nothing else, you can move it from one custodian to another, which you can't do right now. If you want to move your money from Merrill Lynch to Morgan Stanley, it takes you 2 weeks. Whereas if you want to go from Kraken to Coinbase, it only takes less than a day.
Mm-hmm. I never understood that when I was working as a financial advisor. Sometimes I'd be moving assets and it would take, you'd have to make 4 or 5 phone calls to hurry them up. And I used to just think it was like one institution just didn't want to give up the money. So they were purposely, delaying it so they could keep making, a bit of interest on it, or, lending it out, whatever they were doing with it. But it was so frustrating sometimes trying to wait for the money to come over. And then when I learned about Bitcoin, it was like, oh, you can transfer in seconds. Okay. It's a lot different. So so Watchdog, it's a decentralized broker dealer. Can you explain, what makes it decentralized, or how does that function work with it?
Yeah, so sort of, decentralized is kind of it has two meanings. One is that the company focuses on decentralized technologies, particularly distributed ledgers, for the way that the securities ledgers are done. And then as a company itself, we're planning to be, Watchdog is being more decentralized in that it's working with multiple firms and companies that have, they'll have their own licenses through Watchdog, and they can do their own model. So we may have somebody that focuses on Bitcoin and wants to build securities on top of Bitcoin. We may have somebody else that focuses on Ethereum, wants to build on Ethereum. And they could do their own thing in their own way, have their own customers, their own ownership of their business. And it's not totally decentralized because they still have, ties to the same license, but they'll be able to do kind of their own thing. So hopefully down the road, we'll have different affiliates of Watchdog that you barely even know are affiliates of Watchdog, or they're just very, very different. Just like, the way that different people use Ethereum or use Bitcoin, you have very different opinions about how things use. And we want to present a set of tools, including using open source for some of the tools. We're looking at doing some open source kind of, one of the big things in Finra is advertising and marketing. Everything you say has to be approved. So we're looking at open source, making some of those kind of things open source, some educational materials. And eventually, longer term, we'd really like to work with decentralized exchanges, or help somebody create a decentralized exchange, or participate if somebody else does, and do it where the exchange is decentralized, and then there's a layer above that that makes it compliant with, in our case, Finra regulations. And I think that would be a great thing if there was a decentralized exchange where kind of anybody could do what they want, even in other jurisdictions, because all we really would care about from our standpoint, and what Watchdog would care about from its standpoint as a regulated company, is just that they're complying with Finra regulations, pretty much. I mean, if we comply with SEC and Finra regulations, that's 90% of our job there. And so if the base layer of a decentralized platform is flexible enough, it will hopefully allow firms like us to comply with all the regulations we use, in our case, the United States, but also somebody else in Bermuda or somewhere else to be able to comply with the jurisdictions in their case. That's something I think is really exciting. So hopefully that'll be kind of a third meeting that the word decentralized will take on over time.
And possibly get securities being traded more globally rather than, country by country.
Yeah, that's a huge goal. And that's hopefully something that just will happen as the industry matures. Right now, securities trading is very, very siloed. People in their own country tend to buy only what's in their own country. It's very hard as an American to buy a Chinese stock, very hard as a Chinese citizen to buy an American stock, as simple as that should be. Two huge global economies, EU, China, the US. I mean, these are major economies and they can't even really communicate well with each other. And that's a shame. It would be a lot better if we could all just buy direct securities in these countries. And
that would mobilize so much money for a startup, instead of just having your own country, if you could have access to the world's, capital.
Yeah, for sure. I mean, it's better for a lot of reasons, and it would diversify investor base, and part of that is regulatory, but only a little bit of it is regulatory. A lot of it is more logistics, and the blockchain can solve the logistics. The technology can solve a lot of the logistics that relate to having to use a trusted third party, where you have these third parties like DTCC and Euroclear all over the world. Some of it is still regulatory. There are still some regulations, but it's not as bad as a lot of people think. I mean, you, as an American, you're allowed to own stocks in other companies or in other countries. And in certain other jurisdictions, you're allowed to own U.S. stocks. But historically, the bottleneck has only been partly the regulator issues, but also just partly they just don't have a way to do it. The companies aren't able to make it happen. Whereas if you're able to have a little bit more control, which a blockchain can give you through a token of your asset, then you'll be able to do that. So I'm optimistic about that. I think it will take some changes in the global, you probably need some kind of treaty, a couple other things, but hopefully that'll be something that improves a lot over the years.
Mm-hmm. You mentioned DTCC and Euroclear. Can you expand a little what those organizations do?
Yeah, sure. So basically, you used to have shares that were certificates, and that it was a bearer asset. And then eventually that was, so even early on, they weren't always bearer assets. They would have usually some book that would keep track of who owned what. And this is going back hundreds of years to the first stocks. In the United States stock market, in most of its growth years, say starting in the 1950s and 60s, you had some challenges with these ledgers being able to say who owned what. And the issuers were involved with it, and they weren't able to do it. The exchanges weren't really able to do with it. Long story short, what they did is they started having these trusted third parties manage the ledger, because you used to have they used to deliver them by bicycle. You'd have 10,000 shares of IBM, and Merrill Lynch sells 9,000, and Schwab does this, and you deliver the difference on bicycles especially in the 60s. And they'd reconcile all these paper documents. They had these just stacks of paper documents that they'd reconcile. So the industry got together. None of them trusted each other with the ledger. They're not going to trust Goldman Sachs with the ledger because JP Morgan is a competitor to Goldman Sachs, and they're not going to trust JP Morgan. So they all got together and said, we'll trust these parties called DTCC to manage the ledger. And prior to that, the stock market looked like it was going to crash. I mean, like it looked like it was over. It had these horrible, horrible years. It was, down 20%. Something like 80 or 90% of the New York Stock Exchange member firms went out of business in the 60s. So it was just this huge doom and gloom by the late 60s. So then they put everything with a trusted third party called DTCC and let them manage it. And then the funny thing is, that happened all over the world because they had the similar problems. So Euroclear is the Euro version of it. But then by the 90s, that system became, they couldn't even keep track of who owned what. So they invented another kind of trusted party on top of that called CD & Co. So DTCC used to say who owns what, and they couldn't even do that because the who owns what part, it's hundreds of millions of people doing millions and billions of trades. So they just said, all right, everybody, we're just going to say one group owns it, CD & Co. So they invented this company called CD & Co. And they said, okay, CD & Co. owns everything. And CD & Co. is going to write a pledge to the brokers to say, yeah, I own it, but I pledge it to you. And then the brokers will have a pledge where they pledge it to their customer. So nobody really owns anything. It's all owned by CD & Co. And there's been interesting legal cases about this. But basically, that's where we are. So you have these clearing firms like DTCC and Euroclear, and they're universal. Like every single brokerage account in the United States uses DTCC. It's not an optional thing. I shouldn't say it's not optional. It is optional. It's just not really doable with the current system, particularly if you want to deal with listed securities like Apple or Microsoft or Tesla. That's where crypto comes in. Crypto, you don't need DTCC. A lot of people are trying to reinvent the old system. But anyway, it's a complex thing, but basically that's what the short answer is. These are central trusted parties that the industry has invented so that they can have somebody be able to deal with the logistics of how you manage these ledgers. Because it's all about logistics. It's very, very difficult to manage these ledgers. It's not, and I've had techies who come in and say, oh, well, they could just do it with this. No. They spend billions on this stuff. The fact is that until a blockchain, there was just no other way to have people know who owns what without relying on a trusted third party. But now you can. So I think that's what's really exciting about this.
So even like the company itself, they often don't know who all of their stockholders are, or don't they?
Yeah, they don't know at all. So in the current way that it works, Apple, for example, doesn't know who their shareholders are. which is why if you own Apple stock, that's why you never get, if you own Facebook, you never get an email from Zuckerberg saying, hey, shareholder, why don't you buy some more shares? Why don't you? You believe me, if they knew, they would. But you never get that because they don't know who you are. They have to use a service to find out who their shareholders are. And they usually send like hard copy, antiquated, if you own stocks, you get these antiquated hard copy paper proxy things in that say like, hey, you have a vote. Most people throw those away because your vote doesn't really matter unless you're a big institution. So, but yeah, the companies don't really know who their shareholders are. The best they can do is try and use consultants or something. They can try and guess. They could have, they could have like a list of attendees who came there to their shareholder meeting or something like that. But yeah, the companies don't even know who owns what. The only
And it
ones
probably
who really
changes so much every day too.
yeah, it changes by the second. And Apple doesn't want to know, by the way, because they don't want that responsibility. It's just too much work.
Mm-hmm.
I mean, if you just think about the logistics, how's that going to work? You're going to have a data feed that constantly sends like, oh, no, Sasha sold her shares. Oh, she bought some back. She sold half her shares. You may be a day trader. You may do 70 trades in a day.
Mm-hmm.
You're just one person out of millions of shareholders and millions of transactions and hundreds of brokers and tens and tens of thousands of stockbrokers and financial advisors and registered representatives that are out there doing these trades. So the logistics is the big thing. But with a blockchain, the logistics are solved. If you have 22 Ethereum, I know you have 22 Ethereum. I don't need to check on some list or prove it anywhere. If you send me your address, I can verify it right there. As long as I know it's your address, you can send it to me and I don't have to worry about whether it was real or counterfeit. We can resolve all of that just between us with our computers in a matter of an hour. We don't need DTCC. You don't need these organizations. And that's what'll be really exciting. If we can make securities work the way crypto works, where you can just move it around and have the ledger tell you, the blockchain as the ledger telling you what's true rather than the third party, you don't really even need the third party. And then it brings it closer to the people where the transactions are more between, individuals doing their trades, which is what it should be.
Mm-hmm. It'll be nice too if we can get to the point where some of these, I think we've seen a big evolution in the, initial launch of some coins. We had the proof of work ones that, just go launch quietly and people, purchase it as in a fair way. Then we had the ICOs, which was, they were scams or not. It was really a pretty incredible thing to watch, the formation of capital taking place in 2016, 2017. It was there was a lot of money invested in those, and then the SEC kind of cracked down, and we see some, a few Reg A pluses, quite a few Reg D tokens. I'm hoping eventually we see like a way for companies issuing their tokens to do initial public offerings so that just regular folks can invest it, and it's not limited to the to the high net worth investors or the accredited investors. And I know there are, with some of the registered crowdfunding, there's ways to, I think with the A plus, as long and the regs or the CF offerings, as long as there's limits though. You can only invest $5,000 if your income's less than 100 or things like that. So if we can get someone willing to jump through all the hoops, or a mature enough company to get to the stage where they can comply with everything required of an initial public offering in a traditional market, yet do it with securities, and then have several others do the same thing, I think that kind of market would be really exciting to see.
Yeah, for sure.
I wonder what the process would be for typical companies that have regular stocks to change, to switch over and have those offered as digital stocks. But
it's a lot easier for them if you're already public, although those are the biggest companies who have the most to lose and the least to gain. And, it's kind of like there's not a lot of motivation for an Exxon or a Facebook or a Microsoft to do it. But it would be easier for them because they already have all the compliance functions. But, you're right that the best way would be with the regulators, or particularly with the legislators, if the government would make less, either at the very least make a better exemption, something else, make like a new version of reg crowdfunding that's more robust, or some, just some exemption that's so good it makes everything else obsolete, or just something that makes it easier to be fully listed. Right now, being fully listed is just really, really prohibitive. It's like $1 million in costs, which is just crazy. And Reg CF and some of these are big improvements. But I mean, I've asked a lot of people, why can't we just get rid of these accredited investor rules entirely? I mean, if we really looked at these as a society and as a country, there's no good reason for them. They're rules that are decades and decades old, because somebody that nobody even remembers who, nobody even knows who created these things decades and decades ago, somebody long dead had an idea that said, I know, government will protect the consumers, we'll make this rule that they can't buy anything unless they're rich. And that's just a bad rule. It's un-American. It doesn't make any sense. I would think that both the Republicans and the Democrats would be in favor of this. Democrats, why would you support something that favors the ultra rich? And Republicans, why would you support a regulation? Republicans could be, in favor of less regulation, better economy, more jobs, get rid of it. Democrats should be in favor of more fairness and, less elitism. So there shouldn't really be any will, in startups or anybody else. I don't really know anybody out there who's sitting there saying, no, these are a great idea. Everybody's just sort of being beaten on after so many years, saying like, oh, this is the way it is. Nobody's going to let us get rid of it because it's terrible. They'll never let us get rid of it. But who's the they? We're the they. The people should push to get rid of these things. It would be great if there was some political leaders who would scrap some of these rules and make it so that people can buy what they want, because there's no evidence I've seen that indicates that these things prevent fraud or anything else. I mean, Bernie Madoff was chairman of one of the major regulators, and that didn't stop him. So the best thing to reduce scams, in my opinion, is actually to have more freedom, so that more people, I mean, look at the crypto community where you have it relatively unregulated compared to other spaces, and you have people out there constantly taking apart projects and calling each other out, and it's very difficult to get away with a fraud in the crypto space. And that's good. People are much more aware consumers. They don't have this illusion that mother government is going to help them. So if we could get rid of some of these accredited investor rules entirely, that would be a great thing. But in the meantime, hopefully we'll make it have tools where it's easier to comply with.
Yeah. And the 1 year holding period before, and then the requirement of doing that registration statement before anyone can sell it between the accredited investors, I think also, it really discourages people from it would be better, I think, if it wasn't there and people could just freely trade.
It's a logistical pain from the standpoint of those designing tokens and designing securities. It's a real, you have this amazing sleek technology where I could create something right now over the internet and send it to you in live. I could create a token very, very easily and send it to you. But if I want to call that a security and do anything useful with it, especially issue it to the public, then it becomes very burdensome. I have to put all kinds of extra technology into that. That's cumbersome. It's a pain to deal with these things. How do you separate these holders from these holders, and who's accredited and who's passed AML KYC and who hasn't, and all of these kind of things. It just really gums up the works from something that could be much better tool for people.
Mm-hmm. But it seems like you've taken these steps to handle, that is what's required today, and you've got a way for people to operate now within those regulations. And so, if you don't mind me, I is Liquid are they fully up and running for digital securities these days? Or I know that was something they were really working on.
I like Liquid a lot. I know that it's still pretty early yet. I think there's a couple securities maybe on Liquid now. We don't have one yet. It's probably the number one platform we want to support. It's one of the top ones. Mm-hmm. Anything related to Bitcoin. So that includes Liquid, as well as RSK, which is another one working on Liquid. And then Ethereum, just because it's so large. But then other platforms like Ravencoin as well that we support. But Liquid is really high on the list because it's got a good team behind it with a lot of tech cred, and they care a lot about the same kind of things we care about: privacy and security and these kind of things. And it's sort of tied with Bitcoin too, so that's a big plus. So, but I think that I think it's I don't know how many of securities have been done. It's a little early with a lot of these. I mean, there's very few compliant securities of any kind, even on Ethereum, which is the biggest platform that has, thousands of tokens, but how many of them are really legit in compliance with US law? Not that many, maybe less than a dozen probably.
Yeah, yeah. And what about T0? Do they have, I think they were up and functional as a securities exchange last year, but I don't know that there were a lot of, probably the same issue. There weren't a lot of tokens that were actually securities that could go on it. But
yeah, I used to be on the board, but I haven't been on the board since the summer, so I'm not as familiar. Okay. You'd have to ask the company directly, but I think yeah, they same kind of space. They're in the same the same space as a lot of the other groups looking at this whole digital securities ecosystem. And there's a lot of companies like Gemini and Circle and others that are looking at the more regulated route, which I think is the only way to do it. People take an easy shortcut and say, oh, I just won't work in the US. That's very difficult in practice, actually, because the US is very strict about any American, they have a kind of broad definition about what working in the US is. So
I feel like I'm the killer of dreams to people all the time when I'll have these intro calls with them and they're in the US and they're like, oh, we'll just sell to non-Americans. Well, you're here, your company's here. Even if you don't sell to people here, you're still subject to the rules here.
And I think it's interesting because you mentioned that a lot of people have been surprised that the SEC, some people feel like the SEC has been overly strict. Some people have been surprised that they haven't been more strict about some of the enforcement. I think in the case of things where they've been less strict on enforcement, it's partly because they're really carving out the thing that they care most about, which, they've already made it clear they don't care about Bitcoin, they don't care about non-securities, but they really care a lot about securities. So in that one narrow area, they're just not going to let go. They're going to be like a pit bull that just latches their teeth on. They're just not going to let it slide. And they're not going to go for some cutesy trick saying, oh, it's utility, or, it's not a security, or we're not really here, we're really in Canada. They're just not going to go for that. They've been dealing with these things, like I said, since long before crypto, because securities regulations are a big deal. So for decades, people have been trying to figure out, well, what if this is a employment agreement and you can sell it to another? No, not going to work.
Yeah.
A scammer in the world for decades and decades and decades has been trying to avoid these rules, and they never have succeeded. So it's better to just comply. It's funny for me to say these things as somebody who's very free market oriented, very liberty oriented. I sound like some kind of status, but it's not. It's just being a realist. It's like, it's same as that's why I use the drug example, because I'm against the drug war. If I was president or somebody who could raise a magic wand and legalize marijuana, I would, but it doesn't mean that you're going to go and open a dispensary. And that's the way it is if you're thinking about doing these, securities offerings or acting as a broker or something like that. You're just not going to activist around it. You've got to comply, and hopefully the rules will change, make the rules better. But there's a lot of exciting things you can do within the rules. The rules are they're not that bad. Apple, Microsoft, Facebook, Tesla, they all comply as publicly listed companies, and the companies that comply as brokers and financial advisors have built some of the largest and most profitable companies in the world. So it can be done. Exactly.
Yeah. And then so with something you mentioned, Raven, would that be something that you'd be able to work with at Watchdog Capital? Or because the way I understand it, Raven was generated through proof of work, so it's likely not something the SEC would consider a security. So would that preclude it from being something that could be sold on a broker-dealer registered exchange?
Yeah, that's a great question. So Raven can be used to create assets. So you can create, and there's been about 20,000 tokens that have been created on Raven. It's even more than Ethereum's ERC, I think. So you can create it, and then those tokens can be whatever the issuer decides. So some of them are securities.
Okay.
Most of them aren't. Raven itself isn't a security. As far as could we work with it, we plan on working with things like Bitcoin that are not securities, but that's a little bit early still. Broker dealers are allowed to work with commodities, assuming Bitcoin is a commodity, just like a broker dealer can work with gold, but they need to do extra steps. A lot of times they do it as a separate entity or something like that. So in the early stage, I don't think Watchdog would be working directly with non-securities, because it just doesn't make sense to put like Bitcoin probably be first. It doesn't make sense to put them under the umbrella of a broker dealer if it's something that you don't need a broker dealer for. So if a broker dealer wants to work with Bitcoin, they can do that through a separate entity, or but eventually I'd love to see it if there's a way that we could have these things right within the broker dealer. That would be great. And then the second thing is assets created on top of that. So you have actually, it's a great example because you have Ethereum, Bitcoin, and Ravencoin. All three of those base currencies are probably not securities, not by any definition I know. They've already been clear that both Bitcoin and Ethereum are not. If those aren't, then Raven isn't either, because Raven is an exact copy of the Bitcoin code with some modifications. It was never sold or never fundraised like Ethereum is. Doesn't have any central control or any party or funding or anything like that. Not raising funding is a big thing in terms of not becoming a security. Doesn't mean you're not a security, but if you don't raise any money and you don't have any money and you don't have any entity, that goes a long way towards making it not a security. So I don't think Raven is a security, because Raven is just an idea. Basically, you put that code out and then anybody can run that code just like Bitcoin. Mm-hmm. But the things created with it.
Just to let you know, my husband and I are big Raven fans. It actually ended up paying for a wedding in Costa Rica last summer. I know everyone says you should never sell, but we did nice. Cash out a little bit, and it was we were grateful to have it at the time. Yeah.
Oh, that's good. Yeah, so what's created on top of any of those platforms using Bitcoin or Raven or Ethereum, though anything can be a security. In fact, even an individual Bitcoin could be a security, like if it was a counterparty asset. Or, I mean, everybody would hate this and it wouldn't be a good idea to do it. But if I said this particular Bitcoin address and this thing represents 10% of my company and I share it with you and we have an agreement, you could even say a Bitcoin could become a security. Mm-hmm. But that wouldn't make sense a lot. But these second layer assets that trade on these platforms definitely can be securities, and those Watchdog would definitely want to work with. So we want to work with Liquid. That's a high priority. We would definitely want to work with Ethereum and Ravencoin, and maybe other platforms as well, EOS or any other platform. But if something's issued on one of those, because you never know where it's just like jurisdictions. Nobody knows where the good security would be. And some jurisdictions will be better than others. Some of them might be like Nigeria, where you're like, oh, that's a terrible jurisdiction. Mm-hmm. But if it was a really good company, you might even go to a jurisdiction that that you're cautious about, or you may say, I really prefer Delaware corporations, but it doesn't mean you're say, oh, wait a minute, you're registered in Alaska, I'm not going to work with you. You have Wyoming. I think chains will be like jurisdictions. Different people choose jurisdictions for different reasons. Some people like the advantages Wyoming has, or Delaware, or Bahamas, Cayman Islands, whatever. So you might choose Ethereum as your chain, or Bitcoin, or Raven, or EOS. Everyone will have advantages and disadvantages. But ultimately we'll look at the security itself, and hopefully Watchdog will be able to trade a lot of those.
Mm-hmm. Yeah, that's very exciting. And so I missed it, but sorry to have missed it, but you hosted the Securities side table on, I think it was October 19th. And there was one that I did get to attend the previous, in the spring. How did the most recent one go?
It was good, I think. We've worked we created the Satoshi Roundtable to basically foster good quality discussions. I always my favorite part of events is usually like hanging out in the hall and talking to people. So we tried to make an event that sort of is around, built around that, really creating good conversations. And, we use kind of an unconference format so people can pick their own agenda and move with it as they go. And I think it worked, well. We end up getting pretty good people together. And we're trying to do more in New Hampshire just for scalability purposes. We have this farm that we have the ability to use. And it's kind of where our offices are in Portsmouth is kind of a cool, sort of fun tourist town. It's got art galleries and cool restaurants and stuff like that. So our hope is that we'll make it so that it's something that is a good fit for a lot of people. And we do a few of these a year. And we've also told other people that they can do events here. So we already have a couple industry people that might be hosting their own events using the farm and using some of these other venues. So that's fun, I think. It's important to have some kind of centralized gathering place in an uncentralized industry.
Mm-hmm. And New Hampshire has, what does it, live free or die,
Yeah.
like things like that. So it's a kind of a good spot for all this, I think.
Exactly. That's our state motto.
Mm-hmm. That's a good motto. Here in DC, I moved to DC from Florida not too long ago, and they have taxation without representation is the license plate saying. And at first I saw Jeff, my husband now, I saw his license plate, and I thought he must have just got that made for himself or something. And then I started driving around here. I'm like, oh, that really is the license plate motto here. But
that's funny.
Because DC is not, not a full, it's not a state. So that's what they say. They shouldn't get taxed, I guess.
But you could look at it another way. You could say that's what their job description is.
Yeah, no kidding.
All those members of Congress ought to put that on there.
Yeah, well, that's probably what they do drive around with on their plate. So, yeah.
Funny.
It's funny, yeah. Mm-hmm. And anything else, like, or anything else coming up for you, or conferences, or?
Yeah, we've got the next Satoshi Roundtable's in February. That'll be the 6th one, the sort of main one. It's got a good group of people. We've had a lot of great attendees in the past, a lot of the CEOs of major firms. William Shatner's coming this year, and a few other cool people. So it should be good. Mainly I'm focused on, helping Watchdog work and some other investments. Chainstone has a couple investments in other things. And just sort of, pushing it through with this crazy industry. It's always interesting and never stops changing.
Mm-hmm.
Yeah, and I'm particularly excited about how my old world of securities and traditional finance is really merging with this new tech now, which I think is so exciting. And I hope that some of the cypherpunk values will be brought to Wall Street and mainstream finance, because these issues like privacy and things like that are really important to people, and it can really, make the world a better place, really, if we implement more of it.
Mm-hmm, absolutely. And it's like they're two different things. So people sometimes conflate, like, oh, if you are into this regulation stuff, it's taking Bitcoin in a bad direction or so. I've kind of caught that attitude, but I think it's just two completely separate things. Some of the good values of Bitcoin can be, and the distributed ledger aspect can be used for other purposes. And if you look at the size of the capital markets around the world, I've seen some chart, I forget what it was, but it showed Bitcoin, it showed these giant, figures of how much money's in bonds and stocks and, real estate trusts, things like that are all these huge asset classes. And then Bitcoin was just a little, period, like size, thing next to the rest of it. So I think, looking at some of those bigger asset classes, if you could improve the function of them with the ability to transfer them using the ledger, it's a pretty big undertaking, but it would have a huge payoff in the end for everyone. So yeah,
for sure.
Mm-hmm. Yeah, well, thank you so much, Bruce. I really appreciate you taking the time out to speak with me today. And in case some people don't know, where can they find you if they want to get in touch or anything?
Well, I'm on Twitter, and if you have any questions for Watchdog, the team at Watchdog can help. It's at watchdogcapital.com. And then there's some things about the events on the Satoshi Roundtable website, especially these New Hampshire events, which are easier to get a ticket to because they don't tend to be oversold, at least not now. Maybe they'll get more popular later, but we try and make them small so there's plenty of room. So yeah, I'd love to connect. I love to connect with people on social media. And hopefully in person if they come to events or something like that as well.
Excellent. Well, thank you so much, and we'll talk to you soon. Thanks, Bruce.
Thank you.
Bye.